Only some extent. Why not full extent? I think most of the students are confused because how come if the cost of capital increases, how come it will give a positive NPV, right? Okay, okay. Yeah, yeah, I got it. I got it. Now, the coming concept, it means this tax effect, whatever we will be discussing. I believe this particular concept will clarify those two that particular issue. Okay, so don't worry about this. So once we are done with this tax effect on NPV, then you can easily understand that. So around 91 participants, we'll wait one more minute, then we'll go with the session. Okay.
Recording in progress.
Yeah. So till now we understood the inflation effect on the cash flows, and we discussed the general inflation effect, and we also discussed the specific inflation effects. Sorry, the specific inflation effect. So now we'll be focusing on the tax effect on the NPV calculation. So how the tax will affect the NPV calculations. So we'll be focusing on this now. Yeah. So here you can see most companies pay tax. So as per the respective tax authorities, they will be paying the tax. So the impact of corporate tax must be considered in the investment appraisal. It means that whenever you are making the investment decisions, you should consider the impact of tax. Now, generally, impact of corporate tax charged on operating flows, and we should also focus on tax relief on investment spending. So, do remember tax relief on investment spending and tax charged on operating cash flows. So, first we will be focusing on this. Now, generally, tax charged on operating flows. Now here, additional income is equal to additional tax paid and additional cost is equal to less tax paid. Now it means what I am trying to say, suppose if an entity earns additional income, now definitely they will be paying additional tax. Suppose previous year the company earning were only $1 lakh, but the current year the earning was $1,50,000. Now definitely current year the company is liable to pay additional tax. So additional income definitely results in additional tax and additional cost. Suppose if a company incurs additional cost, then definitely they will be paying less tax because our taxable profit, how we will be getting the taxable profit? From the income, we will be deducting the expenses. Now we will be deducting certain allowable expenses and whatever amount is left on that we will be paying the tax. So in simple, if a company incurs the extra cost, then there is a possibility of paying less tax. So just do remember additional income yields to additional tax, and if a company cost increases, additional cost yields to less tax. This is about the tax charged on the operating flows. Now in the same way, if you focus on the tax relief on investment spending. Now, what is this tax relief? So, how we can go with this and how this particular tax relief will affect the net present value, nothing but investment appraisal. Now, generally, here if you see the tax allowable depreciation allowed as an expense against the profits instead of the depreciation. Very, very important point. Tax allowable depreciation allowed as an expense. It means whatever depreciation which can be claimed from the tax authorities can be considered as a tax relief. So tax allowable depreciation allowed as an expense against the profits instead of depreciation. We'll have a clear understanding on this. So first just see the impact of cash flows, impact of tax on the cash flows. Very, very, very important. So the tax charged on the company's profit is a relevant cash flow for NPV purpose. The first important point, so whatever tax charged on the taxable profits of the company should be considered as a relevant cash flow. Relevant cash flow is nothing but, suppose in yesterday query, if you can recollect, there was a decision. It means a company want to purchase a machine, and if they purchase that particular machine, there will be a saving in wages cost by around $1,000, and there is a saving in the material cost by 400. Now it means that the saving in the wages and saving in the material is nothing but relevant cash flow. It means we do consider that particular cash flow for making investment decisions. So relevant cash flow is nothing but cash flows which are considered for making the investment decisions. So same in this case also, whatever the tax which we generally pay on the profits will be considered as a relevant cash flow for calculating the NPV. Now it is assumed, unless otherwise stated in the question, very, very important, it is assumed unless otherwise specifically mentioned in the question that operating cash flows will be taxed at the corporate tax rate. It means that suppose if a company tax rate is 30%, if a company corporate tax rate is 30%, and if their operating cash flows is 1 lakh, on that particular 1 lakh, we'll be charging a tax of 30%. So the first statement you need to remember that operating cash flows will be taxed at the corporate tax rate. Then operating cash outflows will be tax deductible and attract tax relief at the corporate tax rate. This is a very, very important point. Operating cash outflows means whatever the company spendings are there. Suppose if a company purchase, let us assume that any material, or if a company pays any expense. So this operating cash outflows will be tax deductible. Tax deductible in the sense we will be deducting these expenses in order to calculate the taxable profit. Now let me give a small example. During the year, the company revenue or the operating cash flows or the company revenue is $1 lakh, and company paid 30,000 towards the salaries. Company paid 30,000 as salaries and their revenue was 1 lakh. Now here the question is, on what we will be paying the tax? Do we need to pay the tax on 1 lakh, or do we need to pay the tax on 1 lakh minus 30,000? This is a simple question. Do we need to charge tax on $1 lakh, or do we need to deduct the salaries then on the net amount? Yes, we need to charge the tax on 70, because the 30,000 which is paid as salaries is a deductible expense. Whenever you are calculating your taxable profit, all these deductible expenses are to be deducted. Then on the net amount, we generally calculate the tax. So the statement 2 clearly says that operating cash outflows will be tax deductible. It means we can deduct this from our revenue. Okay, and attract the tax relief. Now, investment spending attracts tax allowable depreciation. Suppose if a company purchases any asset, as in the previous case, company purchased a machine. Now, the depreciation on the machine can be considered as a tax allowable. It means we can claim tax relief on the depreciation. How to claim? we'll discuss with an illustration. But do remember that if you purchase an asset or if you invest, we can consider the depreciation for the tax purpose. And the next one, the company is earning net taxable profit overall. The company is earning net taxable profits overall, and this avoids any issues of carrying losses forwards to reduce future taxation. Very important point. Company is earning net taxable profits overall. So net taxable profit means after deducting the expenses from the revenue. This avoids any issues of carrying losses forwards to the reduced future taxation. Now, what is the reason for considering the net taxable profit? Suppose if you are not deducting the expenses, if you are not deducting the expenses, and there is a possibility here, this avoids any issues of carrying losses forward to reduce the future taxation. I hope you might be aware this if a company get any loss in the current year, they did not pay any tax because tax won't be calculated on the loss. And similarly, the company can carry forward these losses in future taxation. It means that suppose in future if they get any profit from that particular profit, the current year loss can be deducted and on the net amount the tax will be calculated. So in order to avoid these kind of issues, the company is earning the net taxable profit overall. It means that what I am trying to say, the tax will be calculated on the net profit. Net profit is nothing but revenue minus deductible expenses. Then tax is paid 1 year after the relating operating cash flow is earned. This is very important. Now generally tax is paid in arrears. Suppose if the financial year of the company is 1st April 2020 to 31st March 2021. Now the tax on the income of this financial year will be paid in the next financial. It means tax amount will be paid in arrears. It won't be paid immediately. It will be paid in arrears. So before I go with the impact, just see the impact of taxation on cash. Just go through these points one. Just have a reading. Anyway, we will be having a detailed discussion on all this. Just once go through. Yeah. Now we first specifically focus on the taxation as the following effect on investment appraisal problem. Now, project cash flows will give rise to taxation, which itself has an impact on the project appraisal. Now, normally we assume that the tax paid on operating flows is due 1 year after the relevant cash flow. As I mentioned, generally tax are payable in arrears. However, it is possible for alternative assumptions to be made, and so you should read any examination question carefully to ascertain precisely what assumptions are made in the question. Anyway, we do have a good number of illustrations regarding that. Now, organization benefit from being able to claim tax allowable depreciation. The effect of this is to reduce the amount of tax that organizations are required to pay. Again, it is important to read any examination question carefully so that you can understand this. So for your better understanding, directly I will be taking an illustration and we'll discuss that particular illustration so that uh, one second. Before illustration, let me focus on the tax allowable depreciation. Yeah, because the most common deduction which we generally consider is depreciation. Because tax authorities allows to claim depreciation as a deduction. But there is a difference between accounting depreciation and taxable depreciation. So we need to claim only taxable depreciation as a deduction. Now we try to understand this. For tax purpose, a business may not deduct the cost of an asset from its profit as depreciation. Do remember, a business may not deduct the cost of an asset from its profit as depreciation in the way it does for the accounting purpose. Instead, the cost must be deducted from the taxable profits in the form of tax allowable depreciation. So the tax allowable depreciation, also known as, it means that in most of the cases in our accounting perspective, we generally charge the we generally charge the depreciation on our cost of asset. I hope you can recollect the formula also. Cost of asset minus residual value divided by life of asset. So this is the common formula which we generally use for charging the depreciation from our accounting perspective. But tax authorities allow to claim the depreciation on written down value. It means that depreciation should be calculated on written down value. Suppose example, first year the cost of asset is 1 lakh, and if your depreciation percentage is 20%, so it means the first year depreciation will be 1 lakh into 20,000 will be the depreciation. But in the second year, we cannot charge same 20,000 as depreciation from the tax perspective. We need to calculate the depreciation on written down value. Now here what will be the written down value? The cost 1 lakh and the first year depreciation 20,000. So 1 lakh minus 20 will be getting a written down value of 80,000, and on that 80,000 we'll be charging 20% as depreciation. And in the third year, again from 80,000 we'll be deducting the depreciation of second year, and whatever amount is left on that we'll be calculating 20%. So it means that tax authorities will charge the depreciation on written down value, not on the cost of asset. Now here there is no concept of charging the depreciation on straight line basis. Straight line basis is not considered here. Only depreciation will be charged on written down value. So the total amount of tax allowable depreciation given over the life of an asset will equate to its fall in value over the period, and the costless scrap process, and the tax allowable depreciation is claimed as early as possible. And this is one more point you need to remember. Now most of the tax authorities will allow us to claim higher depreciation when the asset is new and lower depreciation when the asset becomes old. It means the main agenda of tax authorities is to claim the depreciation as early as possible. Now the tax allowable depreciation is given for every year of ownership except the year of disposal. Now do remember, when the asset is disposed, in that particular year we cannot claim any depreciation. In the year of sale or scrap, a balancing allowance or balancing charge will be done. Now here we try to understand what is this balancing allowance. So I want to focus on my example. Balancing allowance is nothing but whatever amount is left on the day of disposal. Suppose example, an asset was purchased in 2015. Here you can see the pro forma. The cost of asset in 2015 is $1 lakh, and we claimed around 70,000 as depreciation. Then 1 lakh minus 70, our written down value will be 30,000, and we disposed of the asset. Let us assume that for 20,000. So whatever the difference amount is there, we consider it as balancing allowance or balancing charge. It means there is no concept of profit or loss on disposal of asset. Instead of profit or loss on disposal, we consider it as balancing allowance or balance charge. If it is a loss, we consider it as balancing charge. If it is a profit, we consider it as balancing allowance. So just go through this pro forma. So in simple, just you need to remember that we can claim the depreciation only on the written down value basis, and we will be claiming the depreciation excluding the year of disposal. In the year of disposal, we consider the balancing allowance or balancing charge. How we will be getting the balancing allowance or charge? From the initial cost of asset, we will be deducting accumulated tax depreciation, and after deducting that, we will get written down value. And from that, if you deduct the disposal value of the asset, whatever difference which we get, if the disposal value of the asset is more than the written down value, we consider it as balancing allowance. If the disposal value is, sorry, a small correction. If the disposal value is more than the written down value of the asset. Now, generally, if it is more than the written down value of asset, we do consider it as profit on disposal. That profit on disposal is nothing but balancing allowance. And in the similarly, if the disposal value is less than the written down value, it is considered as loss on disposal, nothing but balancing charge. So just go through this. Let me know if you have any queries. Second point, this one. Yeah. See, the total amount of tax allowable depreciation given over the life of an asset will equate to its fall in the value over the period. It is that the cost less any scrap proceeds. It means suppose whatever you are calculating, so whatever depreciation you are calculating, suppose the tax allowable depreciation you calculated for 5 years, and the total value of depreciation for this 5 years is equal to its fall in the value over the period. Nothing but the cost less any scrap proceeds. Nothing but whatever the residual value. Suppose if the cost of asset is 1 lakh, and after deducting the residual value, if it is 70,000, so the amount of depreciation which you claim and this will be same. It means that the simple logic is we cannot claim more depreciation compared to its residual value, compared to its cost list value. Suppose if the cost is 1 lakh and if its scrap value is 30, then its value will be 70,000. Now you will be claiming the depreciation of only 70, not more than 70. So we won't be charging a single penny extra also. So the total amount of depreciation which you claim is equal to the net cost of the asset. Net cost is nothing but the cost of asset minus scrap value. Okay. I hope you understood the second point. Yeah. Any other queries? Now, shall we discuss a small question on balancing allowance or charge? Yeah. Now, an asset is bought for $10,000 and will be used on a project for 4 years, after which it will be disposed of. Tax is payable at 30%. 1 year in arrears. As I mentioned, normally depreciation will be paid, sorry, tax will be paid 1 year in arrears, and tax allowable depreciation is available at 25% reducing balance. It means we need to claim the depreciation at 25% on written down value, nothing but reducing balance. Now the requirement is calculate the tax allowable depreciation and hence the tax savings for each year if the proceeds on disposal of the asset are 2005. Now first let me open my I hope everyone can see my screen. So here, what is the first requirement? Calculate the tax allowable depreciation and hence the tax saving for each year. And if you are expecting that the proceeds of the disposal of an asset are 2,500. So this is the first requirement. Now I will be showing it in Excel. So some important points which are to be considered. Now generally we will be paying the tax in 1 year arrears. It means immediately the tax will not be paid. It will be paid 1 year arrears. Okay. So first year. So total life of the asset is 4 years. I hope you can see that. Now the initial investment is 10,000 and we should claim the depreciation at the rate of 25% on reducing balance sheet. Now can you let me know what will be the tax depreciation for the first year? What will be the depreciation for the first year? How much depreciation we can claim? The cost is 10,000, right? The cost is 10,000 and the amount of depreciation is 25%. Yes, that's it. It is 2,500. So the depreciation for the first year is 2,500. And what will be the written down value? So initially the cost of it. Yes. So the cost of asset is 10,000. So the depreciation amount at the rate of 25%. So here you can see 10,000 into 25%. So 2,500. So the written down value, that is cost of asset minus closing value. So written down value will be 10,000 minus 2,500 depreciation. So the finally the written down value is 7,500. I hope it is clear. Is it clear? Now what will be the depreciation for the second year? Yeah, that is 7,500 into 25%. So the second year depreciation will be 1875, right? And the written down value 7,500 minus 1875. So it will be 5,625. I hope everyone is following. Let me know if you have any confusion, right? And the third year, what will be the depreciation? 5,625 into 25. So it will be 1,406. Okay. And what will be the written down value? 5,625 minus 1,4062.5. So the written down value for the third year is 4,219. Okay, and it is clearly mentioned that in the fourth year the asset is disposed. So as per the tax authorities, in the year of disposal, we won't be calculating any depreciation. But in that year, we need to calculate balancing allowance or balancing charge. I hope you might have recollected that. Right. So in the third year, we will be calculating the balancing allowance or the balancing charge. So, sorry, in the fourth year, because in the fourth year, the asset is disposed. Here you can see it will be used on the project for 4 years, and after it will be disposed of. So it means in the fourth year the asset will be disposed of. Okay, so what will be the balancing allowance or charge? I hope you can easily guess it. Actually return on value is 4,218.75, but we are selling it for, or for your correction, for your clarification, let me show like this. Yeah, balancing allowance. Yeah, after 4 years it is going to dispose. It means at the fourth year, or not after 4 years. So at the end of the fourth year, asset will be disposed. So sale proceeds is 2,500. So balancing allowance. So it is disposed for 2,500. Okay. 4,218.75 minus 2,000. So we got 1,718.7. Sale proceeds they gave in the question. Here you can see. In our first requirement, they gave the sale proceeds. Sale proceeds is 2,500. Sale proceeds will be given in the question only. So I hope it is clear. Let me know whether you understood this. Is it clear up to now?
Yes, sir.
Yeah. Now the most important point. Here they ask us to calculate the tax allowable depreciation and hence the tax saving for each year if the proceeds on the disposal. So we should also calculate the tax saving. Now let me explain how to calculate this tax saving. Because the depreciation can be considered as a deductible expense. Now, how much depreciation we claimed in the first year? What is the depreciation we claimed in the first year? 2,500, right? So the first year depreciation is 2,500. Now my question is, can we assume that the tax saving in the first year is 2,500? Can we consider the tax saving in the first year is 2,500? Because we are claiming 2,500 as an expense. Now, if you claim 2,500 as an expense, definitely our tax amount will decrease. Now, my question is, can we assume this as a tax saving? $750. Okay, so here, yes, 750 is there, but do remember the tax is paid in arrears. Tax is paid in arrears. It means that whatever tax saving which we are getting, Suppose in case of first year, the tax saving, first year we won't be having any tax saving because the tax of the first year will be paid in the second year. So tax of the first year will be paid in the second. It is clearly mentioned. Tax is paid 1 year arrears. Just I highlighted in the question. You can see that. So it means that the tax saving in the second year will be 2,500 into what is the tax rate here? 30%. So the tax saving in the second year will be 7. I hope it is clear. Why we are not considering it in the first year? Because the tax will be paid 1 year in arrears. 1 year in arrears means current year tax will be paid in the next year. So that's why we need to consider the tax saving in the second year. So how we got 750? The depreciation of the first year is 2,500 and the tax rate is 30%. So 2,500 into 30%, we got a tax saving of 7. Is that clear? Now, can you let me know what will be the tax saving in the next year? What will be the tax saving in the next? 562.5 or 563. Very good. So for the next year, what should I do? I need to calculate the depreciation of second year. So depreciation of second year is 875, 1875 into. So then what about the fourth year? Yeah, 562.5 years. What about the fourth year now? How much I can claim? Third year 1406.25, or just I am considering it as 1406 into 30. So the third year tax saving will be 421.8, that is what 420. I hope it is clear. Any question up to here? You want me to repeat? Okay, I will be explaining this balancing elements and balancing. I think most of the students are confused here. Let me repeat. What balancing elements? See, as I mentioned, if in this case, the carrying value of an asset is 4,280, 2 or 218, and when you disposed it for 2,500. So it means that generally we consider it as, normally it is a loss on disposal, right? Because its carrying value is 4,218 and you disposed it as for 2,005. It is a loss. I want everyone to please carefully focus on this. Now, because we are getting a loss, will it benefitable to the company, especially from the tax point of? Is it because it means, will it increases the tax or will it decreases the tax? Because actually its value is to 4,218, but we sold it for only 2,500. It means it is a loss, right? So it will increase or decrease the tax. Very good, perfect. It will decrease the tax. Because there is a decrease in the tax, we will be considering it as an allowance. Is that clear? Because our tax will be decreased. There is a decrease in the tax, so we will be considering it as an allowance. Charge is nothing but you should pay the tax. Charge is nothing but you should pay it. Suppose if it would have been a profit, it would have increased the tax. So that's why we consider it as a charge. I hope the concept is clear, or you want me to explain it more? Yeah. Yes. Now, in this case, up to 40, we calculated here. Next, so it means 421.8, and we are also having a balancing allowance of 1007. So this balancing allowance can be claimed. So can be claimed as a tax relief in the next year, that is in the fifth year. So it means that 1118, or I will take it as 190 into. So it will be around 515.7, or we can consider it as 560. So the total tax relief, so the total tax relief will be 750 plus 562, or 563 plus 422 plus 51. Last part. Okay. Yeah, yeah. I will be explaining the tax saving once again. So here I hope you can find it, the total tax relief. So the total tax relief is 2251. Okay. Now here I will be explaining the tax saving once again. So when you are calculating the tax saving, first you need to see the tax is paid in 1 year arrears. If it is not given also, we should assume that tax is paid in arrears. Normally tax won't be paid in advance. We need to assume that tax is paid in arrears. Of course, in this question they clearly mentioned it arrears, but in most of the questions they won't give it. If they won't give it also, you should assume that it is paid in arrears. Now, tax savings are nothing but tax relief. You can use any word, tax relief or tax saving. Now, tax saving means because of claiming the depreciation. Normally, in this case, the first year we claimed a depreciation of 2500. Now, let us assume that if there was no depreciation, then the company would have paid higher tax. But because of claiming the depreciation as an expense, the tax amount has been decreased. How much it decreased? What is the decrease in the tax amount? How we will be getting that? The depreciation which we claim, on that the tax rate. So it means that in the second year, why I am considering it in the second year? Because taxes are paid in arrears. So the depreciation claimed in the first year is 2500, and tax is payable at the rate of 30%. So it comes to 750. It means that company saved a tax of 750. It means there is a tax relief of 750. So why I am considering it as tax saving? Because 750 amount they can deduct it, and the remaining tax amount they can pay it to the tax authorities. So because of claiming the depreciation, the company saved a tax of 750. So this is relevant. This is related to the first year. Now, when it comes to the second year, we claimed a depreciation of 1875. So the tax saving on this 1875 will be considered in the third year. That is 1875 into again 30%. And when it comes to the fourth year, tax depreciation of third year, that is 1406 into 25%. One second. Yeah, 1406 into, sorry, 30%. So it comes to 422. And finally, in the fourth year, the asset was disposed for 2500. Now, whenever the asset is disposed, we won't calculate any depreciation. Instead of that, we calculate either balancing charge or balancing allowance. Now you need to clearly understand what is this allowance and what is this charge. Charge is nothing but paying extra tax. Allowance is nothing but decrease in the tax. Now, when we'll how to differentiate this allowance and charges? Now, in this illustration, at the end of the fourth year, you can see this. The return on value, it means whenever the asset is disposed, the return on value is 4,280, but it is disposed for only 2,500. It means the disposal value is less than its carrying value or nothing but return on value. If it is less, we assume it as loss on disposal. Loss means this loss can save your tax. So that's why we are assuming it as balance allowance. So how we got this balance allowance? 4,218, that is the return on value, minus the disposal value 2,500. So we got a difference of 1,718, and this is balancing allowance. Nothing but, or simply you can remember that if it is a loss on disposal, it will be a balancing allowance. If it is a profit on disposal, it will be a charge. So again on 1,780, if you calculate at the rate of 30%, then your tax relief would be 515, nothing but 516. So the total tax relief is 2,251. Hope it is clear. Any queries? Yes. Shall we go with the B bit? Any queries on A bit? Because these are very, very important. So if anyone didn't understand any specific point, let me know. If you want, I will be giving 1 minute or 2 minutes time. You can go through this calculation. Akshara, I hope I addressed your query. I believe you asked about this point only, right? Any questions? I want you to respond. Hello, am I audible?
Yes, sir.
Yeah. So shall we go with the B bit now? Now, how would your answer change if the asset were sold for 5,000? Actually, in the A bit, asset was sold for $2,500. If it would have been sold for $5,000, so how your answer would be changed? Yes, very good. It will be considered as a balancing chart. So can anyone let me know the final amount? What will be the total tax relief? Will you try that? What will be the total tax relief? Only small calculation is required. because we will be update calculating only for the last year, that is 50 years. There will be change. Here we won't be getting balancing allowance. Instead of balancing allowance, we will be getting balancing charge, balance charge. So what will be the balance charge? Yes. Okay. Balance charge is 781.25. Very good. So here we are disposing it for 5,000 minus what is our carrying value? 4,219. So 781 will be our balancing charge, and tax, is it tax saving? Should we need to use the word tax saving? You want me to explain the working capital in today's session? Okay, because I don't want you to. And one more small announcement for all the students. In your calendar, I hope you might have saw the classes schedule. So another 4 sessions will be added to that. So will that be fine for you? Whatever sessions which are there in the calendar, to that another 4 sessions will be added. Will that be fine? Because I want everyone to crack these FM paper in the December exams. Everyone need to clear the FM paper in the December. So that is my goal. So I hope most of you will try your level best to do that. So any questions on our discussion? If you have any query, let me know. Now, since the beginning, whatever we discussed till now, if you are perfect with all those concepts, then you already done with around 30%. It means out of 100, now you are ready to score 30 marks. Irrespective of the level of difficulty, you can easily score 30 marks out of 100. So, if you have any question on today's discussion, let me. Yes. See, here always prefer the latest technical articles. Always prefer the latest technical articles. Okay, it means what I'm trying to say, technical articles 2020 and 2021. And here when there is an option of video or article or meeting, so select article option. Okay. Now for FM level, I think you should go with only India. You can select our country India. Is there any option called what is this? All countries or global? Did you found any option called global or all countries? Because For your advanced papers, you can go with that, but for F level papers, F level papers, you can go with India. No, no, no. Here, unnecessarily don't waste your time by referring multiple study resources. So just stick with Kaplan. That is more than sufficient. So generally, I give this advice to the students: don't ever unnecessarily don't increase your work. Yeah, yeah, we will be completing all these chapters. Don't worry about this. Say, there are some selected chapters. On those chapters, I will be spending more time. And there are some chapters where I will be spending less time because that you can, what is this, gain. It means a small input I will be giving. Remaining you can easily learn by going through the study text. No issue. But there are some chapters, like if you can observe, I didn't discuss the functions of finance manager from the study text. But when it comes to investment appraisals, I'm discussing from the study text. So the concepts are the chapters which are very important, not exactly very important. You need to know each and every term. So those chapters I will be focusing from the study text. So we can easily complete all the chapters. Don't worry about it. So any other question? Sorry. I hope most of you might have experienced the learning platform, practice platform, because the other day some students were asking, they were saying that they found some difficulty in accessing that. I hope now you are able to access that practice platform. How many of you opened or accessed the practice platform? Can I know? No one? What I'm asking is how many of you opened the practice platform of ACCA? So Seema tried it. Okay. I hope. Did you found any difficulty in that, Seema? It means what I'm asking is you were able to log in that, right? Okay. Others? Only one participant. So if you not yet opened or tried it, I request the participants to please once go through the practice. And one more important thing in in the month of October, last week of October or first week of November, uh, you will be receiving certain some webinar links relating to your financial management from ACC. So if you receive any mail to register for the webinar, so please don't skip it. I request all the participants to register for those webinars. Okay, and you will also be receiving mails regarding the approach for this ACCA exam. So ACCA is planning to conduct these webinars maybe in the last week of October or first week of November. So please register for that and try to attend those webinars. These webinars are very, very, very good. Don't skip it. Okay. Okay. So if you don't have any query, you can end the session. So tomorrow we'll have a discussion on the role of working capital in investment appraisal. I hope all your doubts were clarified. Any other question? Okay then. So I am ending the session. So have a good day. So tomorrow we'll continue.